How's it going, everyone? Welcome back, VisualTrades. It's been a while. Just a quick explanation as to where I've been. I don't know, school, for the most part. Everything just kind of like hit right after the turn of the year because I was coming out of spring break. So I really had to lock in. For those of you who don't know, I'm pursuing mechanical engineering. I'm seeing stuff that I didn't even know existed. So because of that, I had to take proper time off my schedule to be able to zone in past the first couple of tests and everything, so that way, I could do well. There you go. In terms of mental health, it was taking a little bit of a toll on me. I will be upfront here. There was a lot of financial things that, I had to pretty much take care of during the time of, our descent from 45. I believe it was sometime around like November up until then, where I couldn't really stomach the losses on some of my shares, so I had to sell off. And because of that, I had to take care of some finances. But the love of the TA doesn't really go away, just because of the fact that, I'm seeing things within the stock that, pretty much signify more downside, but at the same time, the fundamentals of the stock, which I won't be covering in this video, lets me know that there's a sizable loading up position that will be taken, that I'll personally be taking in the near future, to where, basically I can size up, better than what I had before. I'm doing this for you guys, basically. I'm not really starstruck with money. I do believe in the play. It's just one of those things where my risk tolerance doesn't allow me to actively be in this play anymore, unless, I don't know, some godforsaken thing happened with some of the options I'm running right now. But yeah, so let's get into the TA. Appreciate you guys for being back. So I'm just going to start off with this little pattern formation right here. Usually I don't like to use fractals as the analysis for my TA, just because of the fact that fractals aren't constant within the actual stock. There's a lot of things that go into play when talking about catalysts, certain indicators that signify more retracements, and what the overall stock is doing that day in conjunction with the market. However, I did notice this little pattern start to form around March 17th, which kind of looked like our run-up that was present all the way up until September 13th, when we peaked around 52 during that one time. Because of that, I slapped on the Bollinger Bands. Right now I have a 30 moving average that's basically shows the tightening and the broadening of the Bollinger Bands. I explained this in past videos. Because of this, I would not be surprised if we did see further downside. So right there, I was formulating a put strategy. I wanted to start doing this where basically I start giving out some sort of like play, per se, that may be coming in the next 30 to 60 days. I just want to make it very clear that puts are not shorting the stock. That would just be adding fuel to the fire. Remember that options are a derivative of the underlying, so it's almost like a tangent. It has nothing to do with the overall. What you do in a derivative has nothing to do with the original function. It's what happens with the function that defines the derivative. It's like math things. So because of this, you can do a call or a put, and that's why gamma squeezing is so effective when in terms of exercising calls, is because at that point you would be affecting the underlying by taking on real shares, and real shares are a direct correlation to the underlying price. When I say underlying, I mean the underlying stock price. So if AMC is trading at 1588, that is the underlying stock price, for those who are confused. Now, we did expect this rally up. For this one, you don't really need to see retracements to kind of figure out what the overall sentiment is. If the fear in the markets continues, it's just funny how like all these things line up. It makes me skeptical as to whether or not this market really is a simulation. I don't know. If you didn't know, Jerome Powell spoke today basically talking about the economic outlook of the United States. There was a lot of beating around the bush, a lot of regurgitatory wordplay that was spoken during the last Fed meeting, where basically he was just saying, inflation is bad, it's here. Obviously he was using the crisis in Russia as the fall guy for what's happening right now, and because of that, it makes it hard to believe that there will be any real accountability within the market within the coming years, to where you can be accountable for all the money that was being printed during 2020, which does affect the overall sentiment moving forward. And he kept talking about the dollar value being the leading global factor, and I'm sitting there, I'm like, that's not the most important thing. You have stagnation in wages that have been constant for about 11 months, that have not adjusted to inflation that has been going on within the market. And on top of that, you have bond yield curves that are doing inverses, similar to what we saw around 2007. Bonds are actually a really good indicator as to seeing whether or not a recession will be coming. But scratch that. Because of that sentiment is why I'm saying what I am with AMC, is why I might see some more downside. Just because of the fact that when you're dealing with an overall recessive market, I know there was some talks about inverse beta and all that stuff. It doesn't help the play as much as people think it would, because people are automatically assuming that the play being dealt with has to deal with forced liquidations of other positions, on top of the fact that people have short positions on here. You got to remember, when you short the flow, you're talking about a very diverse group of people. That includes institutions and retail. I mean, there's some retail that are shorting. Not all retail is buying AMC. So because of this, you have this discrepancy where people think there's going to be this one fateful day. Like, it's a gradual process over time that where you almost have to have the stars align, really, which is why I'm trying to shy away from doing dates and price levels on certain days, because I don't want to get people's hopes up. I don't want to be like sitting up here giving people false advertisements on things. Because of that, in the near future, within the next 2 weeks, I expect us to retrace down back around to this 1330 level, because this was due to a certain pocket that I saw over here. Let me go ahead and retrace this for you real quick. Sorry, I'm getting back into the swing of things. Yeah, so just following this pattern, just bare bone, chart analysis. If I were to go ahead and retrace this right here, it'll slap us around 1430, and because of that, if you look in the broader aspect of things, if I were to zoom out to the 1 hour, this would be considered a failed attempt to retrace back up to these levels. Let me go ahead and zoom out real quick so that way you know what I'm talking about. I'm about to be more fluent with what I'm saying right now. It'll make a lot more sense once I get the chart up, because I didn't write anything down. I was not prepared. Okay, so let me just give you an explanation on retraces. The way they work is, when you have Fibonacci levels that need to be achieved, each retrace tells a story on the overall sentiment of the stock. Because of that, certain retraces or retests, certain retests within the Fibonacci retracement system can consider a stock either bearish or bullish. A failure to retest certain levels will show the conditions for the stock moving forward, because there needs to be gradual amounts of buying pressure consistent with rising prices. See, the only problem that I have with AMC's retests as of lately is that if you look at our volume indicators, like as you can see right here, to me this is a bearish move because of the fact that, one, you have this, I want to say, I don't know, 15 to 20% moves dating back from March 14th all the way up to now. I think this is around GMB's earnings. You have this snapback move that was coming off of a retrace down to the 0.886 from the low of $9 all the way up to the high of 72 off lower volume, which basically means that there's not a lot of buying power that went behind this move, which could consider it as it's something that you would call a dead cat move. Basically, it's considerable to be like a bull trap, where you would have buyers coming in thinking that the bottom is in. Now, because of that, it has to be consistent with a certain influx of buying volume that can trump the overall selling volume that has been happening within the past. And I'm sure if you look at the weekly, you could get a good idea as to what I'm talking about. Okay, so right here, I don't know if you can see this, but this is the buying volume for this week starting Monday. I know the week just started. Actually, let me use something that's a little bit more consistent. I used the 1 day. Here we go. Okay. Yeah, so you have had a steady decrease in buying volume over the past 5 days as we did the snapback move, but it's nothing significant to the amount of selling volume that we saw if we look at a more macro indicator such as the 3-day. Because of this, it makes it hard to make an argument that we will see a break of this bearish pattern heading into the weeks ahead. And a potential retest that I would see coming up would be around the 11 to the high 10s. Just because of the fact that when you take certain retraces off of these patterns, you're gonna have basically a completion of certain fractals that abide by the trend lines that are being made. There's a way to explain this where it doesn't sound like I'm just chatting shit, because this is everything that I had set up. This is just more so off the fly. But as you can see right here, you had the snapback move that basically tried to retest the 0.786. We failed on that, and as soon as we descended back down below the 0.886, we had another snapback move that sat above this trend line, came up, failed to retest lower. So now you're talking about having lower lows and lower highs off low volume. That's consistent with a failed attempt of adding buying pressure. That's considered a downtrend. And yes, you do have flips of the MACD, but the MACD overall is still negative. You know what I mean? It's like playing soccer for like a trash league or something. Or what's a good analogy for this? The MACD being negative but flipping positive between the signal line and the actual MACD line. It's like playing for the Orlando Magic and dropping 20 a night. It's like, yeah, you're dropping 20 a night, but your team's record is like 12-55. Like it doesn't really do anything for you. I hope that analogy made sense. So because of that, if we were to expect further retrace, AMC for the most part likes to retrace down to a midpoint level between the 0.886 and the 1 before we start to see significant upside. So my price targets going into next week would be somewhere around the $12 to $10 range. And I know that does add some weight to the positions that people may currently be holding, but to me, if it were to show significant strength over time, and we would be able to clear certain price levels moving forward, you would just have to see the chart play out more. then I would consider that more so of a loading zone. If we were to hold the support that was formed all the way from January into May, somewhere around the $10 range. I mean, that would make the most sense to me. If not, then you would be talking about a breakdown below support below the $8.37, and then you would be talking about free fall. And I know nobody likes to talk about that, but overall macro wise, the chart does look bearish now. I remember a while back we were talking about. Here we go. This will be the last schematic. I remember overall we were talking about the last time where I was saying this would be my last video on AMC for a while, where I was basically saying, look, if this symmetrical triangle over here doesn't play out, and we don't hold above this 0.618 level, we're gonna head into a bearish trend, because symmetrical triangles are a 50-50 battle. So the Bulls lost this battle, and because of that, we've been in a constant descent since November 24th. With trend lines that have been established all the way down since that day that we broke down below. Also, we confirmed that with volume. So yeah, I don't know. It really is a tough situation. But the key thing is my technical analysis doesn't include the fundamentals of the stock that are hidden away from all of retail that require some digging to do. We all know the facts behind this play. It doesn't take much to do a quick search and see that this is one of the more heavily shorted stocks in the market. I mean, shoot, you have Bloomberg terminals even rating this in 100 squeeze rating. With the right catalyst, I would not be surprised to see a significant jump. The one thing about the stock market is it is in some ways unpredictable, but you can never count out anything. I see a lot of people downplaying, talking about false hope and doesn't fit the narratives of the fundamentals of the play. It's like, I mean, you don't really know yourself. I mean, there are people out here that are just holding just to get their foot in the game, so that way when they get some actual capital, now they know how to deal with the bullshit of the market. I mean, this is all a learning experience, really. So I don't fault anyone for ever, taking a stance. But, when the facts are there and you decide not to respect those stances, that's when it starts to sound like insanity, because it's like, how do you formulate your stance on something when it requires the opposite viewpoint for yours to be valid? There has to be some sort of yin and yang here, where you have to respect the thesis of the Bulls and the Bears, and hopefully may the best man win in due time. But a catalyst to me is required for us to see some significant upside. Luckily, earnings did look strong. I believe a good thing that would two things that I would think before I leave that would drive this thing through the roof. One is insider buying. I don't think it really helped that. I know it was for tax reasons, but I don't think it helped that some executives on the board for AMC sold off their shares, somewhere around this time. So it doesn't really give confidence to investors when you don't have on paper evidence that your own board members are being invested into the stock. Two, I think we need confirmation that the hedge let's be real. They bought into a gold mine market, or I have to look more onto the ticker, but I heard it was something about 22% of the stake. The net value of AMC, I think it went into like gold or something like that. That gold is a hedge against inflation and recessive market conditions. So a statement basically stating why that were to happen, instead of being around the bush and having investors guessing, would provide necessary confirmation for investors to be confident in this play again. Again, you do have a lot of people taking profits on the way down from the squeeze, but the main holders are somewhere around this $9 to $8 range. I don't have the volume indicator here to show the nodes, but there's a huge bar that's going across. And 3, I think we need to see good earnings post-COVID, because obviously there was a hunger to get back outside following 2020, which provided stellar earnings for 2021. Luckily, there's a lot of box office releases that are going to come out. So because of that, you're going to have potential to show, is this a company that's actually strong, coming out the gates on fire, or did they just have the hot hand because, conditions within the world allowed them to inflate their numbers prior to 2020's COVID sell-off, which affected people's capital circulating through markets that are dependent on the market overall being healthy. So I hope that helped out a little bit. This video was not planned. I'm gonna be on my toes and a little bit more concise off things that I want to talk about. One quick last thing, I wanted to talk about GME. To me, this is scarier because I don't see any real support for the stock headed into the coming weeks. This could get ugly really quick. See, when you look for support, you want to talk about multiple days of consolidation around the price level, and that's how you draw your support lines. You can further confirm it with volume to see where most of the buyers are. And, one day of buying isn't really going to cut it for the stock. It's an unfortunate situation that if we do see a decline below 78, you could see a free fall for the coming days, going past, I don't know, all the way down to around the $60 area. And then the support that would catch it would be around $55. Hopefully that doesn't happen. I truly am hopeful, but you never know. A lot of this downside could be the catalyst for squeezing. Who knows? So that'll do it for the video. I'm gonna be a little bit more concise next time, but this was just kind of like a welcoming back. So I hope everybody enjoyed it. I appreciate you guys.